Hey there, my name is Rainer and welcome back to this week's video analysis. So this week I'd like to talk about relative strength on why I use it and how it helps me in my trading. So I'll do this by going through the dollar pairs, alright? So recently we see quite a decent move in the dollar and how I actually use relative strength to pick the right currency pairs to trade. As well as talking about the indices, alright? So relative strength can also be applied across any products, right? The indices, the bonds, and any markets actually. So basically different products in the same sector, you can actually use this relative strength concept to your trading. So I'll also be talking about the Nasdaq, Nikkei, the DAX, and last but not least we'll talk about this trade, the pound Aussie, which I'm still in, and I would say most traders are actually feeling the psychological torment of it because price has been going in your favor, against you, going in your favor and against you, and it's something that you have to get used to it as a trader. So all this and more in this week's market analysis. This is the chart of the Euro Dollar weekly chart, and as you can see, this pair is actually clearly in a downtrend, right? Price made an impulse move lower down here. Then we saw a retracement, another impulse move. Then we have this consolidation before price making a further onslaught down lower. Then what we had in recent week was price consolidating in this, I would say, triangle pattern. So here and here. So you can see that price was actually in a range and volatility has actually been reduced significantly over the last few weeks. And last Friday, I'll say last Thursday could potentially be a game changer because we had this bearish engulfing pattern that broke down towards the downside. And Euro Dollar in terms of relative strength is in the top of my list, and I'm actually short on this pair and looking to scale in further on Euro Dollar. The next best dollar denominated pair in my view is actually the Aussie dollar, right? So you can notice that price retest, right, back towards the 20 period moving average, and we had the bearish engulfing pattern on Thursday. So let me make it clearer. Same as the Euro Dollar, we had the bearish engulfing pattern down here. So you notice that this pair has also been a downtrend and been respecting the 20 and 50 period moving average. So talking about relative strength, how are we actually using it in our trading? Because I've just highlighted to you the two weakest pair that's on my list right now. And how I actually go about comparing relative strength is, one way I go about it is using the moving average, right? So the one way I use about is using moving average. And have a look at this Aussie dollar price action, right? Price has retested once towards the 20 here. Second time it traded just below the 50. Same for the third time, below the 50. Fourth time is below the 50. And right now, price is still below the 50 period moving average. Looking back at the Euro Dollar, right? So you look again, similar theme, right? Price tested once under the 50, twice, thrice. The fourth time it touched the 50 and bounced off. And you see the fifth time it didn't even make it towards the 50, just bounced off the 20. And same for here as well. Touch the 20 and bounce off. So this gives you an idea of how much strength or weakness there is in this particular currency pair. Now you've seen the Euro Dollar. I want you to actually pay attention to the pound dollar. So look at the pound dollar. This is something different right now. Earlier you saw that both the Euro and the Aussie dollar, they're both being contained by the 50 period moving average. But look at the pound dollar. There is actually something significantly different down here in the fact that it actually broke above the 50 period moving average. So this is telling you that there is strength in the pound dollar. There is strength relatively compared to the Euro and the Aussie. So if you want to long the dollar, you want to pair it with a currency pair that's actually weak, very weak. And earlier we saw that the Euro and the Aussie is actually a better candidate, because right now you see that the pound dollar has actually broke above the 50 period moving average, and it's something that is not yet occurred in the Euro and the Aussie dollar. So again, likewise, we can look at the New Zealand dollar, and you see that New Zealand dollar again is not as strong as the pound dollar, alright, in the fact that it's still being contained by the 50 period moving average, but nonetheless it is still pretty strong. As you see, the number of times it tested the 50 period moving average is pretty numerous, alright, compared to the Aussie and Euro. You only tested the 50 period moving average, I would say once or twice, or not at all. So the New Zealand dollar is also pretty strong, but not as strong as the pound dollar. So in terms of relative strength, in terms of the best pair to match against the US dollar, in my list would be number 1, the Euro dollar to short. Number 2 is the Aussie dollar. So I'm not saying that you can't short the New Zealand dollar, but if you were to short a pair which is not as relatively weak compared to the Euro Aussie, what you'll notice is that the Euro dollar may, for example, say it falls 2%, but the relatively stronger pair may maybe drop maybe only 1%. So this is what usually happens when you pick a particular product which is not the top of its category, right? Either the relatively strongest or the relatively weakest. So that is why I usually use relative strength in my trading to help me get the most bang for the buck. Yeah. So that's what I was trying to say. So moving on, we'll look at the indices, right? So this week, I think if you look at my charts, I posted, say, right, looking from the charts, right, Nasdaq, DAX, and Nikkei are the most bullish in terms of relative strength. So these indices, these three are my favorable products to long. So let's look at these three products this week. So this is Nasdaq. See the forward price action. You can see how beautiful the price action is, right? Price respecting the 20 and 50 period moving average down here, right? This is for Nasdaq. And likewise, let's have a look at the DAX. Again, we see DAX respecting the area, the zones, which I've highlighted. So again, this tells you that it is a strong bullish product to look to long right now because it's still above the 20 period moving average. Similarly for Nasdaq and Nikkei as well. So let's look at Nikkei. Nikkei right here. Again, similar price action as Nasdaq and DAX as well, above the 20 period moving average, and the MAs are branching out really nicely, telling you that there is strength in this move. So that was my pick on why I chose Nasdaq, DAX, and Nikkei to look for longs if you are bullish on the indices. So because I felt that these three are the relatively strongest product to trade in the indices sector. So what happens if you pick a product that, say, is not the strongest in terms of relative strength? So what kind of price action would you expect? Say, for example, you're still bullish on indices, but you happen to choose a product which is not relatively strong. It's one of the weaker ones. So for example, like the Hang Seng. So again, you can expect something like this, right? You don't see a clear uptrend. In fact, it's in a range between the resistance down here and the support down here. So this is what happens when you pick a product which is not strong in terms of relative strength, right? It's harder to expect price to go higher in your favor because of the whatever underlying factor there is in the Hang Seng. So likewise, if you look at the Singapore stock market, the STI, the Straits Times Index, again, you don't see a trend down here. No doubt it's in the indices sector, but in terms of relative strength, it's definitely not one of the strongest at all. So resistance down here, and you see this choppy price action down here. I think it's a pair or product I will stay out, right? So the relative strength in this STI is something that I would say that I'm staying out of, right? Because there are actually better candidates like the Nikkei, the DAX, the Nasdaq. Those are clear uptrends which I've highlighted to you earlier, and it's easier to actually identify trading opportunities. So if you just look at the Nikkei, so you can look at it down here. So it's very easy to find a trading setup, right? So the moment price comes back down towards the 20 period moving average, it's opportunity to get long, right? Because you are longing in a bullish sector. The indices are actually very bullish across the world, and in terms of relative strength, the Nikkei is one of the strongest as well. So there's a number of factors lining up that gives this particular trade a better odds of survival compared to trades on the Hang Seng or the STI. So that's what I have for you on relative strength, and it's something a concept which I use readily in my trading, and I hope it helps you. So lastly, I would like to look at this product, the Pound Aussie, which is a trade that I'm actually inside for the last, I think, couple of weeks. So the Pound Aussie. So I think for those of you who do not know, I went long when price we tested this 50 period moving average over here. So I got long, and look what happened next. So as you can see, in the last couple of weeks, price went in my favor, then it went back against me towards my entry, went back in your favor once more. This time the whole world thinking price will retest this high over here. And what happened next? Price go back all the way towards your entry and even against you. And as the looks of it right now, price seems to be consolidating between this swing high and swing low over here. So my stops is still at its original location. I think somewhere around here. So I've not adjusted it because there's absolutely no reason to adjust it. Because, for example, say this is my entry. So if I adjust my stops back to my entry, which is break even, so I adjust my stop, my SL to this entry, my break even. Does it make sense to you? Because price could simply come back down lower, test the support, and head up higher once more. So by pushing my stops to break even, no doubt it's psychological comfort thing to me, but it does not make sense from a market technical analyst point of view, because a support tends to provide a potential bounce for price to actually head higher. So by putting your stops at a level where you expect price to bounce from does not make sense to me. So I left my stop where it is. I did not adjust it. And traders may think that, by pushing your trade to break even is, you're protecting your profits or whatsoever. But to me, no. Based on market, based on structure, I feel that it makes sense to leave my stop where it is currently, which is the initial stop I have over here. So I will not be shifting my stops yet, and I'll watch how price unfolds in the coming week. Either it's going to take me out for a loss of 1 hour if it hit my stop loss, or you retest back this swing high over here, which I've highlighted. So we'll watch what happens next week. So that's all I have for you guys this week. Alright, so if you like what I do, you can actually hit the subscribe button below, and you will stay updated with me every week when I publish my weekly market analysis. And another thing, if you have any comments, feel free to leave on my website, on my YouTube page, or email me if you want to. Right, the last thing you want to do is actually message me on Facebook, because I actually am too busy to attend to all these messages, because I have a lot of messages on Facebook that it starts to clutter my inbox and I do not even look at it anymore. So the best way to contact me is actually leave me a comment or email me. So that's all I have for you guys this week. I wish you guys good luck and good trading. I'll talk to you soon.